Assalamualaikum and a very good day to my lecturer Miss Shaira and to all my fellow classmates. My name is Muhammad Naim bin Ramlan and today I will be presenting on the topic Exploring Fintech Initiatives by Islamic Banks through innovation, challenges and future prospects. This is part of our Islamic banking product and services course which is ISB547. So here's a quick overview of what I will be covering today. First, I will introduce the concept of fintech and how it integrates into Islamic finance. Then, we will explore the initiatives taken by Islamic banks in fintech, the challenges they face, especially with Sharia compliance, and finally, look into the future prospect and my concluding thoughts. First, let's take a look on introduction of fintech in global banking. Financial technology or fintech is the use of digital innovations such as mobile banking, blockchain, and artificial intelligence to improve and automate financial services, making them faster, more secure, and more accessible to users. Globally, fintech has transformed the financial landscape by increasing efficiency, promoting financial inclusion, and offering personalized services that meet modern customer needs. Islamic banking, which operates based on Sharia principles that prohibit interest, riba, and emphasize ethical and profit-sharing financial practices, is also embracing fintech to remain competitive in a rapidly evolving digital economy. This integration allows Islamic banks to improve operational efficiency, customer engagement, and service delivery while maintaining compliance with Islamic law. Additionally, advanced technologies like blockchain and smart contracts can enhance transparency, Sharia governance, and risk management. By adopting fintech, Islamic finance not only aligns with global trends but also strengthens its commitments to ethical, inclusive, and sustainable financial solutions. Next, we will take a look on the Islamic banking initiatives in fintech. Islamic banks around the world are actively adopting fintech innovations to improve their operations, customer service, and competitiveness in the digital financial landscape. These initiatives include the use of contactless payments, mobile apps, and digital wallets, all designed to align with Sharia principles while meeting modern consumer demands. For example, Al Rajhi Bank in Saudi Arabia has successfully implemented digital platforms to seamless and Sharia-compliant financial services. Blockchain technology is also gaining traction among Islamic banks for its transparency and security, especially in areas like cross-border transactions, smart contracts, and sukuk issuance. Institutions such as Rain in Bahrain and Emirates Islamic Bank in Dubai are already exploring blockchain to improve trust and accountability in financial dealings. To accelerate innovation, many Islamic banks are forming strategic partnerships with fintech startups rather than developing solutions internally. In Malaysia, Bank Islam launched BU, a digital bank aimed at younger customers, while CIMB Islamic partnered with Touch and Go to create a Sharia-compliant digital wallet. Malaysia stands out as a global hub for Islamic fintech due to strong regulatory support and dedicated innovation spaces such as regulatory sandboxes by the Securities Commission and Bank Negara Malaysia. Other banks globally like Kuwait Finance House and Qatar Islamic Bank are also using technologies like blockchain, AI chatbots, and predictive analytics to enhance services. These developments show that Islamic banks are not just following digital trends but are using fintech as a tool to uphold ethical values like transparency, financial inclusion, and risk sharing while serving the needs of the Ummah. So for this slide, I will be explaining about the challenges they faced, uh, especially with Sharia compliance. Islamic banks face unique regulatory and Sharia compliance challenges when adopting financial technologies. Unlike conventional banks, they must meet both standard financial regulations and strict Sharia principles, which prohibit elements like riba interest, qarar uncertainty, and maisir speculation. This dual layer of regulation makes integrating fintech solutions more complex and time consuming, especially since they must be reviewed and approved by internal Sharia boards. One major issue is the lack of a unified global Sharia standard, which leads to varying interpretations and makes internal expansion of Islamic fintech difficult. Technologies like peer-to-peer lending and AI tools must be carefully examined to ensure that they do not violate Islamic ethics, requiring early involvement from Sharia advisors in product development to avoid costly revisions later. Despite these hurdles, Islamic banks and fintech firms are developing innovative solutions to maintain Sharia compliance while staying competitive. Products like crowdfunding platforms are built using mudarabah, which is profit sharing, or wakalah, which is agency contracts, avoiding interest-based structures. Digital banks such as Malaysia's BU provide interest-free services with transparent profit models. To speed up and improve compliance checks, automated Sharia screening tools are now being used to assess transactions and investments efficiently. Collaborative efforts between regulators, scholars, and tech developers, along with the support from initiatives like Malaysia's Regulatory Sandbox and Bahrain's Islamic Fintech Hubs, show a clear commitment to balancing innovation with Sharia integrity and ensuring ethical finance is upheld even in a rapidly digitalizing world. Looking ahead, the future of Islamic banking looks promising as it increasingly integrates fintech with sustainable finance and ESG, which is environmental, social, and governance goals. Since Islamic finance is already rooted in ethical and responsible principles, it has a strong foundation to lead in impact-driven initiatives like Green Sukuk, socially responsible investing, and microfinance. Fintech tools such as blockchain, big data, and AI help Islamic bank enhance transparency, ensure real-time Sharia compliance, and improve customer experience while reaching underserved communities. These technologies also support digital-only Islamic banking and smart contract-based financing models, appealing to younger generations. With strong collaboration between banks, regulators, and fintech firms, especially in regions like Southeast Asia and the Middle East, where Islamic finance is set to grow sustainably and remain a relevant force in the global financial system. So for the last slide, I will combine both for conclusion part and also recommendation part. I will start with the conclusion part. Conclusion is the integration of fintech into Islamic banking marks a significant advancement in modernizing financial services while staying true to Islamic moral values. With the use of technologies like blockchain, AI, and mobile apps, Islamic banks have improved service delivery, customer engagement, and Sharia compliance. This digital transformation has helped Islamic banks remain competitive and has supported financial inclusion and participation in sustainable ethical finance. For recommendation, to ensure fintech integration aligns with Islamic principles, banks should work toward developing unified Sharia governance standards for digital finance. Islamic banks must also collaborate with fintech companies, regulators, and Sharia scholars to create innovative yet compliant financial products. Lastly, it is important to invest in digital literacy and awareness among customers and staff to support the ethical use of new technologies. So that brings me to the end of my presentation. Thank you for your time and your attention. Goodbye and have a nice day.